All right. Welcome to Ask the Trader. I'm your host today, Joel Harrison. How are you guys doing today? Today is Friday. Happy Friday. Hope everybody is doing well. All right, stock market hasn't been too nice to us this year. So hopefully I can help you guys. So if you don't know the format of Ask the Trader, I want you to go to the comments section. Go to the comments section. And in the comments section, I want you to give me a stock, one stock, not a million, one stock. And with that particular stock, I want you to make sure that it has at least $1 billion in market cap. And I'm going to try to analyze that stock for you with my tools. The easy way, right? I created a method a while back called the What Would Joel Do method. And, a lot of people out there a lot of the people that just love to, you know, um, shoot first and ask questions later thought that I created what would Joel do so that I can make myself out to be this great, person that you guys need to follow. And it kind of backfired, right? Because that's not why I created it. Then I had my I had my church people that was like, "How dare you say that you are this and that?" And it's just interesting seeing how people react to little things. I'm trying to help the public the best way that I can, and it seems like I'm always explaining myself, and that comes with the territory. I'm not here to rant all day. I'm gonna rant because y'all know that's what I do. But the reason why I created the What Would Joel Do method wasn't for you to follow me, right? It's not to follow the things that I do or the path that I've created to get to the level that I'm at. I created the What Would Joel Do method so that you can create a method for yourself, so that you can ask yourself that question. So, it starts off with a foundation of teaching where, you ask yourself before you do anything, like, why am I doing this? Like, okay, somebody told me to buy Apple. Why am I buying Apple? Like, how much of it am I buying? What is my goal for this Apple investment? And that's clearly why I created What Would Joel Do, because I want you guys to say to yourself, well, if I don't have a strategy or a foundation in place, I can start off with this character, right, who has a proven track record that can, that's done certain things in the market, right? So, I rant all the time because, I put in a lot of work into into producing, the education that I have that's out there. I put in a lot of work to become what we call a stock market guru, and it didn't happen overnight. And and I rant a lot because I see the mistakes that a lot of you guys are making, and a lot of the mistakes that you're making is because we're in this vicious circle where we don't actually know what to look for. And my whole job is that so that you don't run out here and you take that stock tip and you don't run out there and buy this investment and put money here and put money there. Start with your foundation and start asking yourself, why the heck am I doing this in the first place? Because investing and trading is actually the easiest thing I've ever done in my life. But if you don't have a goal, if you don't understand why you're doing it, then you're going to feel like it's gambling. You're going to feel like you got to go take every class that's out there on the planet. And it's not even about the education. And I keep trying to explain that to y'all. It's not about the education, people. I'm here to give you your foundation. Yes, I made it cheap enough so that you guys can understand what to look for. Like, why did Joel become a millionaire, right? Like, he didn't just do he didn't just do it overnight. He didn't just inherit it, right? Like, he and his family worked hard to get to where they are, right? And it doesn't start day one. My kids are great swimmers, yeah, because they had a foundation, they had a coach in their dad that spent decades swimming and teaching it. So when I was able to teach it to them, it came to them a lot easier. My kids were state champions, at 8, 9, 10 years old. Why? Because they didn't learn all the extra stuff that everybody was telling them to do, right? Their dad said, focus on this, this, and this, you're going to be straight. And then let the process take you to wherever you need to go to. And a lot of you guys just don't get that. And I don't know how I need to change to come off a little bit more different, but you guys gotta understand why you're doing what you're doing, and it's not about the amount of money that you spend, and truly it's not even really about the teacher, because you're going to develop your own strategy, your own investments. Everybody has a different scenario. There is no one way. Everybody is dealt different cards. There was no education or book to teach me how to be a father, right? It came with experience. Now, I was able to watch my father and see the mistakes that he made, right? But he formed that foundation. I wanted to be better. I couldn't really in year one or year two say that I was a great father yet. I needed time to go by. And then I can say, you know what? A lot of my friends that are about to be fathers now, I think because I've been in the game for about 10 or 15 years, I got a little bit of experience to teach people maybe some of the successes that I had as a father. The same thing with anything that I do, right? I just come from a time where you're not anointed anything until you put in the time. My wife, for example, when I first met my wife, she had gone to med school and very smart, Ivy League, right? And she went to med school and it took her 4 years, and she couldn't even really say that she was a doctor until she did 4 more years of residency. So when I met her in year one, right, she was a psychiatrist, but she couldn't even work as a psychiatrist until she experienced, being in a hospital, knowing what it takes to be a doctor before she was able to clearly say that she was a physician, right? And she had the degrees, but she wasn't really a doctor until she was able to see patients and experience it. And time is what made her able to have a company come and say, all right, we want to hire you because we've seen the experience that you've gone through. Not just the education, it was the education and the experience. That's where all of you guys go wrong, right? So you got to break it down in its most simplistic way, and you got to give yourself time. Why are you spending 10,000 on a class? I'd rather you take $50, go learn the foundation, and then use $9,950 as experience, because you guys are going to learn way more if you go out there and lose $9,000 than going and taking a $9,000 course. I promise y'all, I've been there, done that. So, a lot of the reasons is because, you guys aren't vetting. You're not vetting the people that you're talking to. You don't know their story. You don't know where they came from. You don't know their foundation. You don't even know if they're the type of individual you want to learn from. So I've been trying to be as transparent as possible. I put myself out there so that I can do one-on-one consultations with you. I know a lot of other teachers online, they're not able to do that. They're going to be in their own space, and they're not going to communicate with you. They're not going to keep themselves open to you where you can just message them and they can try to help you any way that they possibly can. But I tend to, and I was lucky enough that I was able to surround myself with a lot of different people that had success in certain areas, so I could take a little bit from here and take a little bit from there, and then try to form what I felt was a foundational piece. And I kept it to myself until I figured out, dang, I have the right to teach you guys now. And I stunt. I can go out there and talk crap just like anybody else, but I am humble in a way where I don't really feel like Like I have a hard time. I have a hard time saying that I'm a guru, right? I have a hard time saying that I'm a millionaire. I've been a millionaire for a long time, and it's hard for me to say it because as much as y'all think I have ego, I really don't like putting those titles on myself, right? Because I'm like, okay, I know I put in a lot of work, but what I'm finding out is that all the people that are around me are saying, you know what, Joel, you don't give yourself the credit that where it's due, right? And you have all of these other individuals around you that are automatically just becoming these certain things. And this is what was told to me, we don't want to put them there because these are the guys that are making us go into this vicious circle because they haven't put in the work. They don't understand what it takes to actually build an account. So what I'm going to start doing, and I'm going to get to you guys' stocks. I'm just waiting for a couple of people to come on. That's just a strategy that we use, right? I'm going to start having standards. Like there's certain things that, like, if you're going to call yourself this, maybe you have to have certain things that are done. So I call myself a stocks, options, futures, and cryptocurrency guru, right? So what makes me a guru, right? Let's put it out there. Well, I've been in the market for over 10 years. All right. If you go and you watch the true Hollywood story about my life, you're going to understand why I'm who I am. Right? Why do I feel like I have the right to teach you guys about the stock market? Well, I've handled hundreds of thousands of dollars. I've made more than six figures in the market. With money, handling money, managing money. A while back when I first started out and I had my own accounts, I had to manage other people's accounts where I had to make them 20% a month for like 2 years, right? So handling and managing money and actually making more than six figures and building my own personal wealth to a million, or helping build, because I didn't do it by myself. My mama helped, my daddy helped, my wife helped, right? So I didn't get there by myself, but I put in the work to get there. So there, all right. I've called out several stocks where I've made over 100% or 1,000%. So I said, you know what? I've grown accounts. I'm a millionaire. I've grown accounts. I've made over six figures in the stock market. Let's talk about the options market. Options market is the same way. Have you, in my opinion, if you're going to trade options, have you made more than 100% return? Can't call yourself a guru if you haven't made 100% return or 1,000% return in the options market, right? Or if you haven't grown an account and at least made, everybody can make five figures. My sons can make five figures. Are they gurus now? Can they go out there and teach a class? Probably not. But if they were able to grow, I know some guys that are in college that have done extremely well in the last 2 years, and I actually will tune into their YouTube because they actually grew an account and made it six figures. Six figures is, I'm sorry to tell you guys, that's the new goal, because even in life, everybody can get a five-figure job. When you start getting the six figures and you get to seven figures, that's where the measuring cup comes. That's where you have to say, all right, maybe they understand what they're doing. They've taken more than 20 or 30 trades. They built an account, right? So I got the stocks covered. I have the options covered. What have I done in the futures market? Well, the wealth that I created for myself in the beginning came from the futures market. I had to make over six figures, right? So, trading the market and making over 100 or 200% return in an account, growing an account, making more than that six figures in the futures market, in the stocks market, in the options market, and just recently in the crypto market, right? Everybody saw me grow my accounts from about $5,000 to $6,000 to well over 100. I think at one point I was at like $125,000 in my crypto account. I liquidated it, went and paid off a whole bunch of bills, but I've hit those levels that I had set for myself that probably a lot of other teachers and educators and people that are out there have not experienced. Now, should I be on TV? Should I be on TV teaching everybody how to buy bonds? No, I don't profess at having a Series 6 or a Series 7's license. But but you got to know who you're talking to. So I have to put it out there, right? I'm an average Joe just like you that put in the hard work to get to where I'm at. So when you're talking to me, at least you know who I am. And what I'm trying to teach you guys how to do is how to ask that question. What would Mary do? Or what would Sam do? Or what would Greg do in this particular situation? And the foundation is going to come from some of my teaching. So let me go ahead and get started. I see a lot of people have given. I still don't see any stocks, but good afternoon. How you guys doing? I see you guys tagging some of your friends to come on. Shelly May said it's much appreciated for what I do. But let me go ahead and get to you guys' stocks. All right, let's go ahead and let me go ahead and tell you guys a little bit about myself. Again, I'm a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years, over 25,000 hours of trading and investing experience. And all the opinions anything that I talk about today are the opinions of Joel. I want you guys to do your due diligence. That's why we are doing this. We are doing this so that you can do it on your own. All right, that's why we're doing this, so that you can do it on your own. You can take a stock tip, you can do it on your own. You can do it on your own. Not what Joel actually would do. What would you do in this situation? My job is to help you learn how to ask yourself those questions. Then you won't be so confused or taking a million classes trying to figure out what to do. All right, that's my job. So if you haven't downloaded my packages, I'm going to show you guys some beautiful charts today. I have some of the most beautiful charts that are out there. But if you haven't downloaded my Thinkorswim platform yet, it's still $50. It's the only thing that I didn't raise in price because everybody needs that. And it's new and improved. I even do a little bit of education on there. I show you guys the on-demand feature. I added a couple of other indicators, a couple of other John Carter indicators that can help you guys. So it is new and improved. I updated the stocks options, and 60-minute trading videos. So those 3 videos are updated in the ultimate package, in the beginner package. It's from the live videos that we did in December. So if you weren't there and if you want this information, it's going to be included in these packages. If you haven't downloaded my app, please go out there and do it now. It's free. If you have an Android or an iOS device, it's free. Download it. I do have a membership service called the Ultimate Membership Service. With that service, it's $50 a month. A lot of people are taking advantage of it. You're going to have access to all of my material. You're going to get alerts. I put out alerts earlier today about certain stocks that were doing well. I let everybody know that everybody was looking at that AMC and that GameStop, whether you made money or not. You still got those alerts. You knew what strike prices to buy. A couple of places that you guys can find me. You can go to my YouTube. It's the one that's suffering the most. Please go to my YouTube. If you're not part of the Insider Trading Room, go there now. I think we're almost close to 30,000 members. It's growing every day. If you want one-on-one consultations, you can book here. I'm going to slow up consultations this year, focus a lot more on the trading and investing side. So I am doing consultations at the end of the days and on the weekends. And I have a very, very small group of individuals that day trade the market every day. The only way that you can get into that room is you had to buy one of my products. If you bought one of my products, you have free entry into that room. But investing and trading is easy. You guys make it hard. Y'all do. Investing and trading is so easy, and you guys just find a way to make it hard. All right. So my job is to help you guys keep it super simple. All right. I want you guys to put this on your wall somewhere. Keep it super simple. When you meet Joel and you meet my presence, I know I'm like a ball of energy when I'm on here, but when you meet me, I'm actually kind of chill. right? I'm chill until my favorite song comes on, or if we're out and about at a party, yeah, I'm gonna get up and dance, but I can go back and forth. I can be chill, I can be a ball of energy. But when I'm in the stock market, I'm keeping it super simple. And I want you guys to approach the market the same way. You guys need to keep it super simple. All right. Taking class after class after class after class is not how you get better in the market, right? You don't become a better basketball player by going and reading more books. That is the lazy way of not getting into the market by just take. I know some of you guys that are still, I mean, you guys got like 5, 6, 7 degrees, and you're like the smartest person on earth, but won't go teach or won't go get that job or won't go and buy that stock. And you guys know who you are. You just love taking classes because then you feel like you're doing it. Hey, I'm taking the classes. That means I'm in the, I can feel all this energy. No, you need to go buy something. Quit spending money on classes and go buy something. That's where you're going to get the experience. But when you get that experience, you're going to have to keep it super simple. And the earlier you get in, the better you're going to be. The earlier you get in, the better you're going to be. I don't care if you're buying it at the highs and you're losing. People that are losing right now is learning at a faster rate than you are reading a book and going and taking classes. And that's the big secret. It's the secret that nobody else wants to tell you. I'm willing to tell you because my goal is to make sure that you understand what you're doing. So, yes, we're going to ask ourselves what? We're going to go back to the basics. You remember in grade school where when we wanted to do something, we always asked ourselves, what, when, where, why, how? What, when, where, why, how? That was the answer to any question. What, when, where, why, how? That's what I want you to do when you're approaching the stock market. Yes, I want you to use the what would Joel do method. And we're going to learn the what would Joel do method before we look at these particular stocks. And like a magic show, I'm going to make it look easy because it is easy. Anyone that says that it's not easy is just complicated. There's a lot of people out there that are just complicated, like everything in life, everything that they do in life it just can't be that simple. Some people just can't get on a bike. They got to learn everything about that bike. I can get on that bike and move and go. If I wanted to learn about the wheels and the handlebars and the colors, and I can do that on my own, but that's not my job. My job is to teach you guys how to get on that bike and go. And the only way you're going to get better at being on that bike is by riding that bike. I don't know why you guys don't understand this concept. Quit spending money on classes and start spending money on yourself and your investments. You're wasting your time. You're wasting your time. Webinar week is to let you guys understand the foundation. All right. When you guys take webinar week, if you've taken any of my classes and you have the foundation, you have the keywords that you need. Then you can go to YouTube and say, okay, Joel's talking about a flag pattern. Let me go read up on what flag patterns are. And you can spend a whole week learning what a flag pattern is. Joel talked about the Fibonacci retracement tool. I'm going to show you how to use it. You can spend the rest of your life figuring out how to use that Fibonacci retracement tool. All right. It's your job to put in that work, but I'm going to give you guys the foundational pieces that you need so that you can go out there and start doing it. All right. Start doing it. But we got to know what, when, where, why, and then how. Okay. Joel keeps it super simple. Y'all see my charts? This is how simple I keep trade. This is how simple I approach the market. Right? And believe me, who in the room, there's nobody in the insider trading room that talks about every asset class like I do. How is Joel able to talk about everything all the time and be invested in any and everything all the time? It's because I keep it super simple. That's why. I know I'm charged up here, but this is how my brain actually works. It's simple. I see things very clearly. I only use 3 time frames. All right. There's only 3 styles of clothing that I wear. Right. I use the 1 minute chart, the 1 hour, and the 1 day, the 1 minute, the 1 hour, the 1 day, the 1 minute, the 1 hour, the 1 day. And everybody knows, depending on that time frame, is how I'm going to approach the market. So when somebody comes to me and they say, Joel, I want to take a 15-day trade, I say, oh, this is how my brain works. Oh, I'm going to look at this chart. Joel, is that easy? Yeah. The time frame and the amount of money that you want to make should, the chart that you're looking at should help in the strategy that you're using to make money. The problem is that you guys will look at all these charts all the time for every time frame. That's why you can't make money. It's simple to me. Somebody says, Joel, I want to make money on GameStop today. I'm like, oh, okay, I'm going to use the 1 minute chart. But Joel, don't you need to look at the 1 hour for what? You just asked a question to the monk, to the guru, to somebody who's been doing this for over a decade. What am I doing? Right? You can follow somebody else, but their track record probably doesn't show that they've made 6 figures or 7 figures in the market. So what you're learning is how to be like them. It's very simple. Like life is very simple. If you want certain things in life, right, and you know that other people have attained it, then you watch and you ask what they've done to get it. I'm not going to ask terrible fathers how to be a good father. I'm just not going to. And I'm not going to just ask any father. I'm not going to see a guy cradling a baby in the hospital and say, all right, tell me what you did to be a great father. They're a new father. It takes time, right? And that's a concept I don't think you guys grasp yet, right? So I'm trying to help you with it. So I know we're spending a lot of time here, but this is where the issues are. And this is where y'all don't want to spend a lot of time. You got to break down your strategies. You got to be able to answer questions quickly, right? If I want to make money on GameStop for the next 3 months, what chart am I looking at? Day chart. If I want to make money on GameStop today, which chart am I looking at? 1 minute. And then I just react. If I want to make money on GameStop in the next 14 days, what am I going to use? The 1 hour chart. I'm not going from chart to chart and trying to figure out what's going on, because that's how you confuse yourself, because there's 3 different strategies. If I'm playing basketball, there's so many different ways I can get the ball in the hoop, right? I can shoot the 3, right? I can drive down the hole, right? I can dunk. I can shoot a 7-footer. They're all going to score points. There's still 3 different strategies. There's 3 different ball players that have to be built in certain positions to even be able to maximize that position. And a lot of you guys don't understand that. And you guys try to mix it all up. Stop doing it, right? If I need somebody to post up, I'm going to look for a 7-footer like a Shaq. I'm not going to look for Stephen Curry to post somebody up. That's what you guys are doing. You're trying to take a 3-pointer and you got Shaq doing it, because Shaq's a good basketball player. He'll hit it every now and then. You guys got to make sure that you understand why you're doing it, all right? I know I'm spending a lot of time here. I'm trying to make you guys understand the most simple way of looking at the market. But we're going to keep it super simple. So I'm going to even bring my voice down. We're going to keep it super simple. And I'm going to make it a magic show. Watch. When you guys give me your stock, I want you guys to, and I forgot to tell you guys beforehand, I want you guys to give me a time frame. I don't care what date it is. I'm going to show you every single time, not one time. I'm going to show you every single time how you could have made money on it, or if you should have stayed away from it. Every single time. Like it's a magic show, because it's simple. Stocks are either going to go up or down. Stocks are either going to go up or down. Your job is to try to position yourself with that upward move or downward move. We're going to use the what would Joel do method. Now, the what would Joel do method was created from what I call not what I call, but it was developed from a flag pattern, a bull flag. All right, a bull flag. Now, why did I fall in love with this pattern? Because it's simple to me, right? Stocks don't go up in a straight, like y'all think that stocks go up in a straight line like a rocket. Like, in crypto, everybody puts out the rockets, and it's kind of funny, the rocket emoji that goes up, you make a whole bunch of money. But in reality, that's not how stocks move up. Stocks are going to move up at an angle, at an angle. So if I want to make money on something, shouldn't I be looking at something that's going from the bottom right hand of my screen to the top left? The bottom right to the top left. I don't want to find something that's going from the bottom right to the bottom left. And a lot of you guys trade that way. You look for stocks that go from the bottom right to the bottom left, and then that's where you guys buy. I want to make money from the bottom right to the top left. The bottom right to the top left. That makes more sense to me. So I use a bull flag pattern. So what is it? What is a bullish flag? Well, a bullish flag is just a pattern that's found in stocks that shows strong uptrends. All right. And it's usually a continuation pattern. That's why I use this, right? Because I want to make money and I want to make money now. I don't want to wait. I want to make money now. Sometimes these bull flags come out of, rectangles or periods where the market is going sideways. But I don't like to wait. I hate waiting. Y'all know that I can't stand waiting. Don't invite me to a club unless I'm able to come to the door and come in, or I ain't coming. I don't stand in lines no more. I'm too old for that. I did that back in college. I don't stand in lines no more. Even when we go to the airport, I ain't standing in lines. Like the longest line I'm going to stand in is the line at clear, right? And it's usually 2 or 3 people in clear. I hate lines. I'll pay whatever I need to not stand in a line. I don't like to wait. So a bull flag pattern is going to get you in, or you're either going to be right or wrong. It's the easiest pattern to follow. Because when stocks start to go up, if I'm in it and it keeps going up, I'm going to make money immediately. I don't want to buy something that's coming down. That's what a lot of you guys do, because you want to buy it coming down and you just think that you can time the market and make it go back up. Well, if you know it's going to go back up, why do I have to sit through this whole period? Like I could be making money somewhere else. So I started using the bull flag pattern. Once I started using the bull flag pattern, my investing and trading went to a whole nother level. Not too many people are going to teach this because you have to get in later. You got to think differently than anybody else, because the common sense way of approaching the market, you would think buy low, sell high, Joel. Buy low, sell high, buy low, sell high, buy low, sell high. Nah. And that's the mistake that I made in the beginning. Buy low, sell high is great for investing or if you have time. It's terrible for trading. Investing, yeah, I got time. It's terrible for trading. And a lot of you guys are experiencing that right now. So if I'm going to find something that's going to trend up to the, to the upside, I'm going to use the TTM trend. All right. So, I love every time I look at this TTM trend, I get so excited because I remember the day that I actually found it, right? And, a lot of the indicators that I use that goes with my personality are things that I'm probably going to use for the rest of my life. And that's something that you guys are going to do as well. You're going to find these indicators. You're going to find these stocks. You're going to find that significant other, right, that goes along with your personality. And the TTM trend, because of the way that I trade and the way that you buy it, like if you ever wanted to trade the TTM trend, it's very easy. You just look for 3 candles in a row, right? 1, 2, 3, 3 candles. You see 3 consecutive candles, then you should make money to the upside or make money to the downside if you're shorting it. And then everybody knows that I use the 200-day moving average as an area to buy if I'm investing. I also use the Ichimoku because in my world, this is how my brain thinks. Stocks are either going to go up or down. They're either going to go up or down. Up or down, up or down. I ain't trying to buy nothing to go sideways. Up or down. When it goes up or down, it's going to have to, in order for a stock to go up, it's got to go up. In order for a stock to go down, it has to go down. And as it starts to go up, it's going to create a trail. and it should be color coded, right? This can't go up here, guys, without having green candles. It's almost impossible. You're never going to see a bunch of red candles all the way to the high. It's got to, it has to, it's just numbers. It has to create 3 green candle patterns in order to get here. It's just impossible for it to get here without it. And you're not going to wake up one day and a stock like Apple is going to be at $64 and then the next day it's going to be at 100. It's too big, right? It's a $3 trillion company. $1.5 trillion ain't going to flow into Apple. But that goes back to the questioning, like, can a stock do that? Yeah. So you got to understand what type of stock you're buying, right? That goes back to the what, when, where, why, how. The Ichimoku is something that I use to kind of show you guys the patterns of the market, to give me an idea if there's actual buying or actual selling. Because it's a fake out, right? I can look at a chart, but I can't really tell if the stock is going up now because it failed for 15 days. Because if it failed for 15 days and it's going up, it might just be short-lived. So I have to find an indicator that kind of tells me if it's buying pressure or selling pressure. So this is how my brain works. I know that things go up or down. If it goes up or down, it has to leave a color trend. And then I have one indicator that tells me if it's true buying or if it's true selling. Very simple. I'm keeping it super simple. That's why so many people can understand my methods. The problem is people get my method so fast, like within 5 minutes, they're like, hold up, I feel like I need to learn more. And I'm like, well, if you want to learn more, go Google Ichimoku, go read a book about it. It's still going to come to the same conclusion that anything above it is bullish and anything below it is bearish. You feel like Joe just gave me everything about the John Carter. So maybe I need to go read about it because I can't believe that that's everything about it. But then after you read all of his books, you're going to come to the conclusion that usually when you get a couple of the problem is I'm very, very good at finding the reason for everything. I'm excellent at that. And it throws people because they're like, I can't believe I just learned 10 years worth of stuff in like 5 or 10 minutes. That's what you get with me, right? We're going to break down everything so that you understand the foundational basis of it. And then you can go on your own and learn whatever you want about it. You can spend 20 years learning how to trade options. And some of you guys will. But it's still going to come down to what's your personality and what's your goal. And I think that's the problem that a lot of you guys don't do. Y'all will go take all these classes. You don't even know why you're taking it. I don't know why I'm taking this. Maybe I'll find out once I take this class. You're trying to find yourselves in these classes when you need to get your butts in the market, buy and sell some stuff. Then you're going to say, you know what? This is what I want to do. So when I take a class, if that class doesn't have this, then it's a waste of my time. Or you can just simply, like, it amazes me that you guys will pay $10,000. Now, Joel has a $50 consultation for 30 minutes. Some of you guys will be like, $50 for 30 minutes? I'm not going to do that. Then you'll go take a $10,000 class where the teacher meets with you for an hour or two. And I'm like, you know how many times you could have met with me for $10,000? Like, you literally could have met with me for 2 hours a day for like what? That's what, 50, 100, 200, 205 days. That's 1,000. You could have met with me for 2 hours a day for what, 10 weeks? You think meeting with me for 2 hours a day, you gonna learn something. But y'all don't think like the individual that's trying to learn this information is so weird to me because outside of the stock market, most of us have really, really good common sense. Like buying real estate, go to the grocery store, you guys have spreadsheets. Like when it comes to common sense, you guys can take it to a whole nother level. But when y'all come to the stock market, it's almost like people get dumb. It's literally like the Matrix. And I don't understand it because I'm like, why doesn't it carry over from the real world into this world? right? Why are the rules different here? Why in this world you don't have to show what you've done to be able to show people how to do it, right? I don't understand that, right? But my job is to try to change that, right? So we got the John Carter, we got the Ichimoku, and let's get to you guys' stocks. All right. So I know I told you guys to give me stocks. What I also want you to do is give me a time frame. I told you guys I'm gonna make this a magic show. And with the magic show, I'm gonna show you guys like I didn't study anybody's stock, but what I did do is I studied my methods, right? And I'm trying to explain my methods so that you know how to trade it. So when you give me something like a MTTR, this is the problem. I'm not saying, Charles, I'm not saying that you are the problem. I'm saying that when somebody gives me MTTR, y'all just assume this is how you're supposed to look at it. It's not, because I only got a stock, and this is where the problem starts. What am I doing with this stock? Is this a day trade? Do I want to make money on this for 10 years? Do I want to make money on this in 10 minutes or 10 hours or 10 weeks? I have A. I don't have B, and I don't have C. I don't have a goal. So then what you guys do is you get confused, and then you'll go take a class. When you should have said what, when, where, why, how. All right. What are we trading? MTTR. What is it about this company? Like what is it that we're trying to do with it? I'm just going to assume that this person wanted to look at MTTR as an investment. All right. So you got the stock. What is the stock? MTTR, right? What, when? When are we going to buy this? Where are we going to buy it? Well, we're going to assume that we're going to buy it on the TD Ameritrade platform. What, when, where, why? Why are we buying this? Why are we even looking at it? Is it because we got a stock tip? Is it growth potential? Like why? And then how are we going to do it? So I'm just going to assume, I'm just going to look at my clock, right? It's 1:14, right? So I'm just going to add the numbers. 1, 2, 1 plus 1 plus 4, 1, 2, 4, 6. We're going to say that this is a 6-week trade. All right. So if it's a 6-week trade, I only want to make money on it in about a month and a half. So now I got MTTR. I know the time frame that I want to trade it on. 6 weeks. I don't want to trade it for 6 months. So I don't care about what it did for 5 years. I don't care. What matters on a 6-week trade? Whatever it did in the last 6 weeks, right? So, does market cap matter? Yeah, because I also need to know how big that company is. So when I go and I type MTTR over here, this is how my brain works. All right, hold on. We're going to go to Yahoo Finance. Quickly. And it was the first one that's there. So this is how I'm going to break it down. First of all, I need to know how big it is, right? Mataport. What is it? Do I really need to know what it does? Not really. I know that it's a $3 billion company. I want to make money on it for 6 weeks. So, maybe I can look at a 6-month. I could look at a day chart. As you can see, the stock's been going down. It's in a downtrend. So trend-wise, it's not going up. It's going down. A lot of you guys make this mistake. You see something going down. I'm going to buy here. I'm going to buy here. I'm going to buy here. I'm going to buy here, 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 here. Why is it going down? Because you just got on a sliding board thinking that it was about to stop. Now, I get it if you bought it here and now it's sliding. Wait for that slide to start going up. But if you want to trade it for 6 weeks, you know it's small. That means it's volatile. You know it's small. You know it's volatile. What has it done in 52 weeks? Well, in 52 weeks, it's gone from $10 at the low to $40 at the high. So it's telling me it's the type of stock that can move 100%. This thing can go, right? It can go. But I only want to make money on it for 6 weeks. So 6 weeks is a little bit over a month. So my brain automatically says, I'm going to use a day chart. Maybe I'm going to use maybe the 50-day moving average, right? So when I pull up something like MTTR and I go to my charts and I see where we are right now, if I want to make money in the next 6 weeks, first of all, this is going down. Why am I trying to buy something that's doing this? Because Joe buy low, sell high, buy low, sell high. Yeah, but you're trying to be in this for 6 weeks. What did it do in the last 6 weeks? Well, in the last 6 weeks, it's January now. 6 weeks ago was what? Sometime in November? We were at $27. We now at 15. What makes you think it's about to turn around now? Because it's hitting the 200-day. Yeah, but the 200-day moving average is not used for a 6-week trade. So anybody expecting to make money in 6 weeks, you already are on the wrong path. But Joe, didn't you teach us the 200-day and that's where you should buy it at? Yeah. But what's the goal of the 200? The average tells you how long you should be in it. If I buy it at the 200-day, I have to expect to be in it for 200 days before I see a profit. Now, what if it hits it and then it starts to go up immediately? Well, then you put yourself in a great position to make money quickly. But Joel is already thinking, if I want to make money in 6 weeks, I need it to start going up. It ain't going up yet. And the problem is that a lot of you guys think, well, it's here. Why would I buy it right here? Because if you're trying to make something in 6 weeks, we don't care about where it came from. We care about where it can go. All right? We care about where it can go because this can easily do this. We can easily see this chart do this. It can go up, it can come down, and then it can start going up. Who cares if you bought it right here for $20 if it's going to go to 34? Y'all care about that because you want to be the one that said that you bought it for $14. Joel don't care because we're at 14 now. It can easily go to 10. It can go to 5. You don't know how low this can go. How low can you go? This bad boy can go, and ain't nothing on this chart saying it's going up yet. What could have kept you out of this trade right now? I'm going to show you what. This one little line right here that y'all refuse to learn. This right here. This line right there. Let's break down that line. Joel, it can't be that simple. It is that simple because it's just that simple. You cannot get to 28 without breaking through that line. There's no way. There's no way you can get to it. You can't go backwards in time and then go over to 28. You can't go underneath it. You cannot break this line and get to $28 without breaking through the line. You cannot break through that line unless you break through the line. The stock can't go up unless it goes up. I know I'm telling you guys, when it comes to the stock market, y'all don't use common sense. You don't. That's why I'm in business. This one little line tells me when the buying starts. So I wait. And yes, I'm not going to get it for 15. But guess what? What if it goes down to 7 and then it breaks it at 15? You just now got it for the price that you thought or wished that you got it for. Instead of sitting there in the pain of it going down in price. Now, you can also use, if I let's say somebody said, Joel, I want to trade Mataport but I want to trade it as a day trade. That means you want to get in and out the same day. Am I gonna, when I go to my when I go to my brain, I say to myself, well, if I want to make money today, does what happened, does me looking at this month chart matter? Like, do I need to look at a 200-day moving chart to make money that day? You guys are doing that. You literally are going in there, figuring, not the only thing that matters is how big it is. I know that it's 3 billion. Joel keeps it simple. I don't need to know all that other stuff. If I want to make money on it today, how much money can I make? What am I trading? Matterport. When am I trading it? Today. Where am I trading it? I'm trading it on TD Ameritrade or Robinhood or wherever you're going to trade it at. Why am I trading this? I want to make money. How much money are you trying to make? I don't know. Joe, how much money can I make? Exactly. You can't trade something if you don't know how much money you can make. How much money can I make? And am I trading it in stock? Am I trading it in options? What you guys will do is just go run and trade stocks or run and trade options. I still don't know how much money I can make. If I'm trading Matterport today, how much money can I make, Mr. Joel, Mr. Sam, Mr. Greg, Mr. Jason, Mr. Andre, Mr. Nate? I'm only saying, Mrs. Shelley? Well, Mr. Joel, under your methods, if I want to trade something that day, I got to know how much it moves. Because I can't just force money out of the market. Well, how much does Matterport move in a day? Matterport moves $2. How did you know that? Because it's right here. There's an indicator that tells you the average move that this stock makes on a daily basis over the last 14 days. And included in those 14 days is the volatility. So this, in the last couple of weeks, it might move $2. 4 weeks ago, it might have moved $1. So if I want to trade Matterport today, I know that I can make $2. That means if I buy this for $15 and expecting it to go to 25 today, I'm being unrealistic. All right. It's going to move $2. That means if I buy it, it might move to 17 or it might drop to 13 if this bad boy moves $2. So if I want to make this, if I want to buy this, am I going to buy it today because I studied it all night? Me and other teachers really, really get angry when you guys ask us the day before for a day trade the next day. Because I have no idea like anybody that asked that question, I know is a rookie because you don't understand the market yet. What happens on a daily basis, you can't predict what's going to happen on Monday. We know that on Mondays are the easiest days to make money because it's the hedge fund, it's called hedge fund Mondays. But we don't know. I can try to trade Apple and make $4. But what if billionaires are selling Apple on Monday? I can't tell you to trade Apple on Friday so that you can make. There's nothing in my charts that's going to tell me that Apple should be the play on Monday. There's nothing. But what I can do is I can wake up on Monday and I can say, or let's just assume today was Monday, and I can say, are people buying Apple? That's the first question. How do I know if people are buying Apple? Because people are buying Apple. I know I keep it simple like that and I say stuff like that, but seriously, guys, this is how I make money. I don't buy anything that people ain't buying. In real estate, I'm only gonna flip houses in areas that are hot. I'm not gonna go in an area where the average selling price of a house is 2 years, expecting because I renovated it to make money. And you guys do that. You buy Apple if people are buying it. You buy Matterport if people are buying it that day. You already saw that people been selling it for years. I mean, for months or weeks. So the bias was to the downside. Anybody trying to trade this to the upside is going against the stream. Like you're going against what the market is doing. That's not how you make money in this game. You could have woke up today. You already knew that the bias was down. And then at 9:45, when I kind of tell you guys to kind of look at the market, and you saw it break back underneath the Ichimoku, there was some buying pressure. And then it was like, nope, nope, nope. We're going to continue doing what we've been doing for the last 3, 4, 5 weeks. Right? So if you wanted to make money today, you could have. But in my opinion, $2 would have been the most that you could have probably made. So when it started to move from the lows from 15, I could have said, if this is going up today, which is which is upstream, I can probably get to 1791. So when it tried to get there, and it said, nope, I didn't get the 17 yet. Nope. And then it broke below these lows. You guys should have known it was going to do its continuation pattern of what it's been doing for the last couple of weeks, which is go down. Now, you smarty arties out there are going to say, well, Joel, can't you use this number and know about how far it can go down? And the answer is yes. If this average is $2 a day, two, what I got to do to make y'all understand this? Then it's probably going to drop 2. So if I was looking to buy this at the lows, or if I was shorting this, and I know that it's at 16.8, and I'm trying to make money on it to the downside, I can try to squeeze out $2. So 14.8 should have been the area that I probably 16.8, 14.8 was the area that I'm trying to maybe get out. All right, we didn't quite get there, but the day isn't over, right? We got as close as 15.3. So we got within 50 cents, right? So we went what, $1.50? You went 3/4 of the move. That's not too bad of a trade. You put yourself in a position to make money to the downside on a stock that already was trending to the downside before you got up there, before you looked at it. All right. So, long term, I'll wait until we break here and then I'll buy it. I'll try to hold it for 200 days. Options, I'm going to try to hold it for 200 days. Anybody that bought it here trying to make money in 50 days, you lost. Okay, you lost. Who cares? You lost a little bit of money. Take the next trade. All right. All right. I'm going to breeze through the rest of you guys' stocks. My job was to kind of give you guys the foundation. I did the ranting. Now I'm going to breeze through your stocks. Hopefully, when you give me a stock now, I want you to give me a time frame. Give me a date, right? You guys can go about 10 years back. We're going to use the same strategy. Just give me a date. We're going to go 10 years back. We're going to go to whatever date you give me, even if it's just a number that we throw out there. And I'm going to show you guys how to do this, right? 200-day, you want to be above it in order to buy it to the upside. Below it, you probably want to short. When it breaks this trend, it starts to go green. We want to make money to the upside, but we're going to wait 200 days. If we want to make money 30 days or less, we're going to look at the 1-hour chart. So the day chart, watch this, the day chart. The day chart is for 30 days or longer using the what would Joel do method. The 1-hour chart. The 1-hour chart is for 30 days or less. Y'all heard what I just said? The hour chart is for 30 days or less. The 1 minute chart, we only using one chart today. The 1 minute chart is for that day only. Don't use this 1 minute chart telling me that you're going to hold this overnight. The 1 minute chart is for getting in and out the same day. I know it's exciting. I know y'all want to see every little tick. It only matters for intraday traders. That's the rules to this game. So before we even look at the charts, I just taught y'all something that is significant in the way that you guys look at the market. Some of you guys don't even understand how significant that was, because I literally just broke it down from trading to investing, which is a huge issue that we have when it comes to buying these stocks. Okay. All right. So let's look at Melly. All right. Melly is Mercado Libre. I'm going to assume, actually, I'm going to go from the down up. Sorry, guys. I'm going to go from the down up this time. Normally, I don't do it. You guys are still not giving me time. Hold on. All right, we're going to look at Mercado. So I'm just going to assume long term until I see an actual date on your stock. All right, so long term. What's long term, guys? That means using a day chart. If I'm using a day chart, Joel he's expecting to be in that trade 30 days or longer. The goal is 200 or more. Minimum is 30 days. So if it starts going down in 5, 10, 15 days, it ain't been 30 days yet. After 30 days, then you can start assessing it and saying, oh, maybe this is wrong. All right, so when I look at something like Mercado Libre, first of all, I need to know what it does, right? Mercado Libre is an e-commerce company similar to Amazon. It's the Amazon of Latin America, okay? Mercado Libre is, hold on. Mercado Libre is a $54 billion company. It has some decent beta, 1.4 beta. It's down today. Doesn't mean that there's something wrong with the company because it's down today, okay? So when we pull up Mercado Libre and we look at let's just look at a clean chart for now, you're going to notice that it's underneath the 200-day. When should you have bought this? Joel already said that if it hits the 200-day and it starts to go green, then maybe you can take a shot. Well, this is what we're experiencing right now, right? So a lot of people got burnt, but I'm going to tell you why you got burnt. What didn't you notice? Look at this. This chart is going an angle down. It's not angled up. It's angled down. So if it's angled down, guys, that's a stock that's now in a downtrend. That means that every time it comes up to the 200-day, it's probably going to use that as resistance. Y'all see that? It was resistance here. It's like magic. We want this line to be angled up. It's not angled up like here. See, when it's angled up, look at what you get. When it's angled up, when you hit the 200-day, which it hit it here, you make money. Okay? Even when it hit here, you make money. Even when it hit here, you make money. It's angled up. It's angled up, you make money up. It's angled up, you make money up. When it's angled down, you make money down. This is down. It's not up anymore. It's not this. It's not this. It's this. This is a different trade now. A lot of you guys didn't know that. Now, every time it hits the 200-day, everybody's getting out. Everybody's getting out. Everybody's getting out. So it's a different, this is a shorter's chart. Like anybody that's buying puts and shorting, this is a stock that now you short. And then you do the opposite. When it hits the when it goes through the 200 and it comes back and it starts to go red 3, 1, 2, 3, probably going down. It's the opposite now. It's the total opposite. You throw a line there, it breaks this, it goes 3 red, it's now probably going lower. And that's what's happening. Look at what happened here. It broke the trend here. It started to go red, 1, 2, 3. It's now doing the opposite of of a flag pattern. This is called a bear flag, not a bull flag. This is a bear flag, probably going lower because this is now angled down, not up. Okay. All right. Let's look at the spiders. The good old S&P 500. The S&P 500 is still angled up. So it's still doing well. It's still doing well, people, because look at what happens when you go back and you use the patterns and you say, I'm going to keep it simple like Joel. I ain't going to make stuff complicated. I don't want my life to be complicated. I want things to be simple. He makes everything look simple because it is. The S&P 500, when the 200 is angled down, you make money to the downside. So when it hits the 200-day, as a short seller, I'm shorting it right there. Because I'm going to do the opposite. I'm going to draw a line right here when it's angled down. And when we break it and I see 3 reds, I'm going to make money to the downside. Even the person that said, here, I'm going to short. They said, well, it went 1, 2, 3. They took a short right here, and then it went up, and then it came down, and then it just didn't do what they wanted it to do. And then at some point, the 200 days started to angle up. And anybody that was short here said, oh, spaghetti-o, I got to get out. I'm wrong. Doesn't mean that I'm a terrible person. Just means it's not doing what I thought it was going to do. I took the risk to reward. I had a hypothesis. And it's not working. It gave you one last time to get out. But then when it was angled up, they had to get out here because the buyers came in heavy. Because they said, oh, look at that. The 200-day is angled up. It went green on the Carter. Even the people that bought it way up here, like the Joels. Joel, you always be getting in late. I be getting in late, but I be making bank. Because you care about where it came from, and I care about where it's going. I could care less that it came from here. This is real buying because look at what happened psychologically. Let's break it down. Why are you buying this? Joel, why am I buying the spiders right here? What, when, where, why, how? What am I buying? I'm buying the S&P 500. What the heck is the S&P 500? It's the 500 largest companies in America. Hold up, Joel. So you mean to tell me that this indicator is telling us what 500 companies are doing? Yes, not just one. That means if 500 companies collectively are being bought and it's going up, you can't just turn the market around when everybody's buying all 500 companies collectively. That means it's real buying happening. So, this is what we're buying. When are we buying it? We're buying it when the billionaires buy it. John Carter went green. It hit the 200-day. Where? I don't know what platform. Maybe it's your Fidelity account. Maybe it's your TD Ameritrade account. Why? Well, you're buying it because history tells us that when the 200-day is angled up, it's the best buying opportunity to buy something like this. How are you going to buy it? Right? How are you going to get into something that hits the 200-day like this? Well, you're going to use a method that, that you're learning today, the what would Joe do method. How do I buy something like this that all the millionaires and billionaires are buying that historically has made you money? Well, I'm going to buy it when it hits the 200-day. And when it goes up, it has to go up. It has to break this line in order to go up. And when that happens, it's real buying. Why are people continually buying this? Like, why is the market still going up, Joe? Why didn't it go back to the 200-day? Because first of all, it's June or July. The people that move the market are not you and me. The people that move the market are the pension funds and the hedge funds that are taking these large amounts of money, from the working class, and they're managing those funds and bonds and 401ks and IRAs. And their job is not to put your money in a savings account. Their job is to put your money to work. Your job is to put it into a savings account because you're scary. They're not scared because they're using your money. And I think y'all don't figure that out either. Like all this doom gloom about the market. Guys, these people that make money in the market only make money when they put your money to work. Why wouldn't they put your money to work? They don't care about you. They care about their bank accounts. They gonna buy it at some point. They don't care if they lose all your money because they ain't gonna lose nothing. Maybe respect. It's your money they using. I don't think y'all understand that concept yet. Y'all think that they operate like you, and they don't. They take your funds and they got to put it. So where the heck am I going to put this money at to make money? Well, I got a Series 6 and a Series 7's license. That means I can't put it in real estate. I got to put it into something, some type of equity in the stock market. Y'all understand? So it's going to continue to go up because they're going to continually get funds every single week. They got to take that money. They got to put it back into the market. As it starts to go up in value, they're going to feel more and more comfortable because they know at this point, maybe 90% of the market was invested. So if they see that only 50 or 60% of the market is invested, they're going to keep investing until everybody gets back to 90% or 100% invested, which would take us to the all-time highs. That's why the market's going to continue to go up. And they're not going to throw it all in at one time like y'all do. Y'all, the market don't operate like you and I. We all in or all out. They're not going to go out and sell their whole portfolios. They're not doing that. Your whole portfolio is not coming out of the market. They might take a piece of it out. They might sell here or there. They're not going to sell everything. That's not how the market works. So it starts to go up in value. And then when it hits the 200-day again, it goes up in value. So what's happening right now? And then when it hits the 200-day, it keeps going up in value. Y'all see that? Y'all see this pattern? Like Joel didn't create this. So what's happening right now? Because y'all see it worked on a 200-day like 20 times. We literally went back to 2015. Y'all ain't seen a loss yet. Not one. Not one loss when it hits the 200-day. We way up here in the stratosphere, and y'all talking about the world coming to an end. Now think about it, guys. We didn't survive the pandemic. The scariest moment in our history was probably March 2020. We also was scared back in back in 2008, 2009, which was also March. Americans aren't scared no more. They don't care about the new Omicron. They don't care about any viruses that come out anymore because most of us have dealt with the despair of our loved ones dying. At this point, we're just like, if you're going to take me out, take me out. But I'm going to make some money while I'm doing it. So anybody that thinks that the market is going to zero, you don't understand Americans, and you're thinking outside of your own common sense. Because if that's going to happen, that means that nobody's going to buy cars anymore. Nobody's going to go to the grocery stores. Nobody's going to buy metaverse, all of these Oculus devices. Nobody's going to take vacations. Nobody's going to go to Las Vegas. Nobody's going to do Airbnbs. Nobody's going to take Ubers. Nobody's going to buy Bitcoin. Like, come on, people, grow up. The market is not going nowhere. It ain't been nowhere. It's battle tested. And they about to print $5 trillion. And y'all don't use that type of common sense to make money in the market. Anything outside of the stock market, you guys are geniuses. You come into the stock market, brain goes dumb. That's why it's hard for you to make money in the market. And you keep taking class after class after class because it was created to do that. Because the financial people did it on purpose. They didn't want everybody to be able to handle their own money. Because how can they make money off of your money if you handle it on your own? So we got to tell you that you can't do it on your own. They got to say that they're smarter than we are. And they're not. And that's what I'm trying to teach you guys. All right. Dumb it down. You can do better than these people on TV. I've been doing it for 10 years. All right. But what I do like to know is I want to know what they're doing. I want to know what the dumb are doing with all the money because I'm smarter than they are. But they have all the money. They move the market. So I got to understand their ways. And this is what they're using. They're not taking all of these elaborate classes that you guys think that are out there. All right. They don't have these elaborate strategies that you guys think that you have to create to make money. They're just like, yo, is this company going up or down? Is Tesla moving up or down? Is Ford moving up or down? Why should I buy Ford? What, when, where, why? Why should I buy Ford? Well, because they're making electric cars. When should I buy Ford? You should have been buying it when they decided to create electric cars. Where are you going to buy it? I don't know what platform you're using. Why are you buying it? You're buying Ford because they're in the electric car space. Their market cap is only $50 billion and Tesla is at 1 trillion. If that wasn't enough information to make you buy Ford, you're not supposed to be a great investor. I'm sorry, because it was as clear as day. You guys spend so much time thinking you know everything instead of the absolute most simple reason to buy it. Because if the dumb people out here who got the billions of dollars are throwing all their money throwing your money into the electric car space, where are they going to put it to make money? Because you're calling them up talking about, you need to put my money in electric cars. You need to put my money in electric cars. You need to put my money in electric cars. And they're like, well, dang, I got a list of electric cars to put it in. They're talking about it on TV. You got Tesla at 1 trillion. That's too high. You got Toyota. That's not American made. You got Ford and General Motors. Well, dang, Ford got the F-150. It's the best-selling vehicle on the planet. And GM got a Hummer that's coming out. And Lucid is coming out, and their numbers are better than Tesla's. And Rivian, Ford helped them get to where they're going. So buying these companies were no-brainers. They were small. Electric cars was what everybody was talking about, and they had room to grow. And Tesla was the base for everything. All this other stuff that y'all be talking about, it makes no sense to me. That's why I don't even really listen to people that like just come into the room and just think they gurus. Because you don't know how to make money. You don't understand how these cats that aren't smart are using your money. You don't understand that yet. All right. And I'm trying to teach you guys to dumb it down so that you can make money in the market and then try to figure out how to buy something like a Tesla. Right? Because if you had just pulled up Tesla, all this, they got the best cars, or they haven't produced this many vehicles. And I'm like, what are you talking about? Do you know how the people that move the market buy? You obviously don't. Because your reasoning or your hypothesis of why a stock should be what it is, you don't have no say. You don't have no money in the market. You just got a hypothesis. But if you go back and you look at history and you see how it reacts to the 200-day, you're going to see that when the 200-day is down and Tesla hits it, it's going to drop in price. When it hits it, it's going to drop in price. And everybody like myself, all we did was we waited. We said, well, I'm just going to wait. I'm just going to wait until this 200-day started to angle up again because it looked like this was it, right? Wrong, 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 wrong. Still angled down. Wrong, 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 wrong. Then it started to angle up. You didn't even have to wait for it to hit the 200 day. You could have put this one little line there and you would have said, how would Joel react to this? Because that's scary. If I see that Tesla came from $45, that's scary. It's scary. Why would I buy it? Joe, why would I buy this way up here at 68 when it came from 50? Joe, my friend bought it for $50. He up 50%. Why would I buy it way up here? Because you're going off of your emotions. You don't run a hedge fund or a pension fund. You don't have people calling you saying, where should you put this money? Right? You guys don't even understand that when a company is added to something like the S&P or one of these ETFs, do y'all know that mutual funds are forced to buy? I don't think y'all know this. They're forced to buy it. Like they have to take a portion of their proceeds and they have to go and buy it. Like they have to. Like by law, they were going to get money. Okay. So if I know that I have to put my money somewhere and I have to put it in the best company, I got to know when to do it. And this is what they're using to kind of figure out when to buy these. They're not using the TTM trend. They're not using that, and they're not using the Ichimoku. But they are using the 200-day. They're waiting for a trend to break back to the upside. And all I'm doing is giving you guys a visual edge to know to get in right there. Okay. 3. 1, 2, 3. Break trend. 1, 2, 3. Break trend. 1, 2, 3. And then it's off to the races. You don't believe me? Watch this. It hits the 200-day again. You think all of a sudden in March of 2020, which was the March lows, which was the pandemic, you think they just start selling a whole bunch of cars? The answer is no. The answer is the market sold off. These hedge funds and pension funds had to know when to get back in the market because they're the ones that move the market, not you and I. We got to know when to get back in. We ain't been making money for 3 months. Can we start making money again? I need to go on vacation for the summer. Let's put their money to use. It ain't our money. Let's put their money back into the market. So then they call up all that, yo, we're going to all get back into the market, on this particular date. Why? Because we had the 200-day moving average. And they're like, oh, shoot. You think we can sell that to John? They call up John. Yo, John, we know you got a $10 billion fund, right? We all thinking about getting back into the market. We at the 200-day on all of the stocks. Let's start putting our money back in. These are the secret conversations that y'all don't hear about. Then the market Tesla starts to go up. Apple starts to go up. Microsoft and Google, why are they all going up at the same time? What does Apple going up at the same time got to do with Tesla going up at the same time? Because y'all don't move the market. They do. And they going to put all your money back into the same stuff you was already invested in. But you're going to give yourself an edge so that when it hits the 200 days, it starts to go green. You say, I've seen this happen before. Joel showed me. What would Joel do? I've seen this. And then when you see the same pattern happen again, you end up making very easy money. Very easy. The easiest money you ever gonna make. But you gotta be patient. You're not gonna learn this taking 50-some classes. You're gonna learn this by looking at your charts, buying and experiencing the lows, experiencing the highs. That's how you make money in this game, by being a player. You don't get an NBA championship by being a spectator. But y'all spectators all of a sudden got NBA championships. You're a spectator. You've been watching everybody make money in crypto and stocks and options, and now you deserve it. You deserve it of having a championship like me. And here, poor old Joel is in the game. I'm experiencing the fouls. I'm experiencing the camaraderie with my teammates. And we all, when we finally get that championship, we all, popping the bottles. And then here we go. We see 3 or 4 other spectators in the room too. They like, yeah, we won. Like you weren't in the. I forgot what old boy said. You weren't in the gym. What did he say? You weren't in the. I forgot. I messed up that line. All right, but you weren't in the gym shooting. You weren't in the gym practicing. You weren't there. How do you get the same respect? All right, but you guys are gonna earn your respect. You're gonna earn your respect from this game by stop taking classes and start freaking investing. Take the little bit of stuff that I'm giving you, then go to YouTube. Don't go to YouTube first. Take the information that you're getting from the room, then go to YouTube. Maybe hit me up. Joe, I saw this on YouTube. You know anything about this? I was reading about these Elliott waves. What you know about these Elliott waves? And I'll be like, oh, it's similar to the flag patterns. It's just 5 instead of 3. Bam, I just broke it down. I see this MACD, this RSI. What's going on with this moving average convergence divergence? It's similar to the squeeze. This is like the new MACD. You can learn about the MACD, but Joel, shouldn't you teach the MACD in your classes? Why? It made me money in the past, but now I'm using the squeeze. It's a little bit more accurate. It's more new age, and it goes along with the trend that I'm already teaching. Right? I don't have to use the MACD and RSI. That's like old people. That's like old people stuff. It works, but I like this. This is what made me who I am. All right. Let's look and see what Tesla's doing right now. What time is it? 1:58. All right. So we hit the 200-day again, went green. 1, 2, 3. Dang, Joel, this joint worked again. Yep, and it worked right there. And then it worked again right here. And then it worked again right here. And now we're sitting way up here. We're sitting way up here. Should you be buying Tesla way up here? Nah, now you buying it. I understand buy low, sell high. Let this bad boy come in some. Could you have bought it? Could you have used my method and bought it when it broke this trend and it went green? Yeah, you could have. 4 days later, you were up. Maybe right now, if you were trading it, you could be thinking, I don't know, we just broke this low, Joe. I might want to get out of this position. It does. I got in a little late, way up here. Doesn't look like it's doing what I thought it could do. All right, I get that. But I also would have been like, yeah, but there's also a upside down head and shoulders pattern, which is actually one of the most bullish patterns you can possibly have. So you might want to hold off, because if we break and go back up, guys, we're going back to highs. This is a pattern. It's called a head and shoulders pattern, but it's upside down. All right. I promise you guys I'm gonna breeze through the rest of these. All right, so let's go through. We looked at Tesla, we looked at SPY. Let's look at Roku. All right, very fast this time. Roku. Why are we buying it? Well, it's a streaming company. Streaming companies do kind of well during periods where we're sitting at home, right? One of the best companies for streaming devices. Why is it struggling? It can struggle just to be struggling. It can be struggling just because the market is struggling, right? Those were the highs. This was a base, and it broke that support. When it broke that support, guys, it went up, down, up. I don't like stocks that's going sideways. It went up, down, but then it turned around and went down. What do you also see, guys? This is why I sold my Roku. Right? It's going down. It's doing the opposite now. Once it started to go down, the short sellers did the opposite. They said, you know what? When this breaks 1, 2, 3, and I get 3 reds, I'm going to short. This is a short sell now. It's not a long-term trade. All right, let's look at Lucid. Lucid, this is the Tesla killer. All right, the highest EPA rating ever for an electric car. All right, just got an alert that Netflix is below 539. Don't know why I gave myself that alert. I'll look at it later. All right, let's look at Lucid. Lucid, like magic, guys, like magic. What happens magically at the 200-day moving average? It hits it, it goes green. I make money. Oh, Joe, look at that. This is what I get. This is what you guys do. Joel says expect to make money 200 days later. That means if there's 30 days in a month, 30 days in a month, that means 100 days is 3 months. That means 200 days is like 6 or 7 months. That means if it's September and you buy it at the 200 day, I can't even expect to really make money until October, November, December, January, February, until March of next year. We ain't even at March yet. It's not even March yet. So then what I see you guys doing is it starts to go up, then it starts to go down. Oh my God, Joel, it's going to zero. No, it ain't. You're supposed to give yourself 6 months. See? And then you went and you sold it. And then 1 month later, it started to run. It ran 30 days later than you thought it was going to run. Why? Because none of us really know when the market's going to move. But if we trade the market in its most simplistic way and we give ourselves the time, depending on the chart we're looking at, then money can be made very easy. I ended up making like a 100 or 200% return on this trade. I remember when I first got in it, everybody was happy. Then everybody got out of it, and I was left to being lucid by myself. Then when I made all this money and I started to sell lucid, everybody told me, why you didn't tell us when to buy it, Joel? And I'm like, I did tell you when to buy it. Y'all just got out. I stayed in because I was patient. You're just arrogant. Just throwing out all these trades. Show us a trade that you didn't call out. And I'm like, all right. All you got to do is go into the room and type my name and a stock. I probably talked about it, probably told you when to buy it. All right. So I get that all the time. Like cats are coming to the room. Joe, why should I listen to you? I don't know. I mean, I did make a whole bunch of money in every single market. Every single market. All right. So what's happening right now? 200 days angled up. It went green here. You could have bought it. Guys, right now, this is a buy signal for Lucid. That's a buy signal. You should have been in it. Okay. Can you wait until it hits here? Yeah. If you're using a day chart, the question is, if it starts to drop and it goes here, do you get out of it? No. Why? Because if you're using a day chart, you already assumed that you was going to be in it for 200 days. Why are you getting out on day 23? Because you don't know how to invest or trade. Now, if I'm trading this and I want to make money in, let's say I bought Lucid and I want to make money in 77 days. Well, 77 days is like what, 2.5 months? I'm still going to use a day chart. Maybe I'll pull out a 50-day just to give myself an edge. So if I want to make money in 70 days and it hits the 50-day and the 50-day says I have to be in it for 50 days, now if I buy this, it makes a lot of sense because it's hitting the 50-day. If I wanted to make money in 20 days, because I see you guys using the 20-day a lot of you guys don't know why you're using it. You're just using it because somebody said, Noble said, hey, use the 20-day. Nothing against Noble. Noble's brilliant when it comes to charts. But do you understand why you're doing it? Like, why am I using the 20-day? Yes, everything reverts back to the mean, but it doesn't mean that you're going to make money all the time. It hit the 20-day here. Some of you guys are like, but it hit the 20-day, Joel, why am I losing? Because everything is not 100%. Okay? And if I trade the way that I trade, it's going to hit the 20-day and then bounce. Then you want to get in it and then wait 20 days. So how does Joel trade this yellow line? Well, same way. If you want to use the 20-day, the 50-day, or the 200-day, and you're trading something like Lucid, it's the same exact theory. If this line is angled down and we hit the 20, it's probably going down. So it hits the 20, it goes red, it's probably going lower for 20 days. It hits it again, it goes red, probably going down for 20 days. It gets above it, you get a cross like this. That's bullish. Now I can trade it the opposite way. It goes up, it goes down, it starts to go up. I get 3. Maybe I want to trade up for 20 days. Well, you made money in 5. That's all you were looking for in the first place. You gave yourself 20 days. I was in profit in 5. 50 day, give yourself 50 days. 20 days, give yourself 20 days. 200 days, give yourself 200 days. That's how you do it. I ain't switched from 77 different charts to figure that out. One chart. All right, because it was 30 days or longer. Even though I can use this 20 day on this day chart and still get me, 20 days of movement. Okay. All right. So once the 200 day started or the 50 day started to angle up, well, the 50-day people bought and the 200-day people. So the 50-day people that bought gave themselves 50 days. They made money. 200-day, they made money. 20-day, they gave money. So anytime you see a convergence of all the you see that 1, 2, 3, you got all the moving averages at one area. Think about it. You got 3 types of people buying. You got your investors buying, your midterm people buying, and your short term. That's why you get an explosion in price. It didn't get an explosion in price because they just started making a whole bunch of cars that day. It's because you got a collection of a lot of different individuals that were buying. Because now I'm trying to understand the why. Why is this happening? What, when, where, why, how? Okay. And now we're sitting here. You can take a shot here for 50 days or 200 days. 20 days, though, it looks kind of bad. The 20 day is angled down. I kind of want to see the 20 and the 50 day angled up. I don't see that. Okay. All right. Charles giving me the fist. Let's look at Ford. Since we're talking about electric cars, let's pull up Ford. All right. Don't know the time frame. I'm going to break down Ford 3 different ways. 3 different ways. Long term. Too far away from the 200. When should you have bought this for an investment? You should have bought Ford way back here, not way up there, because you listened to Joel the other day and he blabbed about Ford. In the future, you're going to say, I'm going to wait for it to drop as close to this 200 day as possible. When it starts to go green, then I'm going to maybe buy Ford. Maybe you missed out on it as an investment. Y'all know you could have bought Ford at $14, which is still higher than where I got in at, which was 7. You could have did this in September. I had people telling me, Joel, you're ignorant for telling people to buy Ford. And all I was thinking was, they have no idea how to invest. There's some people in the room that just don't like Ford. And I get that. And I laugh about it all the time. Just like I don't like oil. Like there's memes of me hating oil. Oil was the best producer in the market last year. I can come out in the room and tell people that I wasn't wrong. It's just that I don't like to buy oil. Congratulations to any and everybody that made money off oil. I'm just not going to ride it up with you. And there's a lot of people that don't like Ford in that way. But the technicians and the fundamentalists that came in the room and said, these are the reasons why you shouldn't be buying Ford. That's when I'm like, okay, they don't understand. They probably haven't been investing in the market. So they don't understand how these types of things work. They don't understand how to take the fundamentals and the technicals to kind of figure out in its most simplistic way why something like this can go up in value, right? By looking at the Teslas, because the economy was talking about this space. It was primed to go up. The market was going up. It was primed to go up. The infrastructure bill was being created for a trade. There was short-term momentum that made not only Ford, guys, any company that had metal and 4 tires went up in price. And I had people saying, no, this is going down. I said, okay, they don't understand. They're not in tune with the market. Okay. 200-day angled up, 50-day and 20-day angled up, squeeze going off. I mean, John Carter going green, almost hit the 200-day. How many different reasons are there to buy the stock? I kept telling her, like, can y'all please buy it? I'm making all this money. Me and Demetrius are making money by ourselves. And then now you guys want to get on the bandwagon way up here? Way up here? Y'all done told me and a bunch of my other buddies, we've been wrong from way back here in 2020. Y'all been telling us we were wrong. Okay? We got in a little bit earlier than normal. 200-day was angled down, but the 50-day was angled up. We were telling y'all to get in way back here. And I said, will y'all please come along with us? And not only were we telling you guys to come along with us, we were going into the options market fundamentally. Why were we buying it? Fundamentally, when we looked up the options contracts, we noticed 400,000 contracts at the open interest in December. Fundamentally, guys, somebody was buying the heck out of Ford. It was probably Ford. So then when we took that fundamental information and we said, hold up, man. We started, that's when you start looking it up and saying, why are all these people buying this? And then you start hearing the news about all the electric stuff that's coming out, the F-150 that's coming out. They're about to put out the news for it. I can understand why a lot of people didn't want to buy here. But then once the 200-day started to angle up, you had to throw out your reasoning for why you should buy something. Like you just throw it out the door because everybody was buying it. And when I say everybody, I mean the people that move the market. So you can not like me, but if everybody's buying it, they're the ones that move the market. And because Ford is part of the S&P, I believe, or part of some of these big indexes, they were going to get funding no matter what. And it's a 100-year-old company. So then when the 50 and the 20-day was angled up, look at this, guys. When it hit the 50, it went green, easy money. Blue on the squeeze. Then when it hit the 20 days later, you made money. 20 days later, you made money. 20 days later, you made money. Look at this. It hits the 50-day. You gave yourself 50 days. Am I going to get in the minute it hits the 50? No, that's what rookies do. I'm going to wait until it goes green, 3 up. 1, 2, 3, bam. Y'all see how when I trade, when you use the what would Joel do method, there is no waiting. There's no waiting. I'm probably about to be making money in 2, 3, 4 days. And then I'm going to be in the room showing receipts and gloating very quickly. Because psychologically, I understand why I'm doing what I'm doing. I'm not doing what I'm doing because I think it's going to turn. I'm getting in because it did turn. There's a difference. I don't buy things because I think this might happen. I'm going to take an educated guess because I think, even though I see everybody running out of a burning building, I'm the fireman that's going to put it out. No, I'm the guy that sees the firemen come out and the firemen say, hey guys, the fire is over. All the hard part is gone. The fire came, destroyed the home. The flames were up. We got the people out. We put out the fires. And now we can rebuild this house. Y'all like to run into burning buildings. I don't. I ain't running in no burning building. I'm not. Well, I got firemen that can do that. I'm not trying to be a fireman. Y'all are. That's why trading and investing is so complicated for y'all. Because you got to let the thing do what it's going to do, but you got to look and see why you're doing it. Like what, when, where, why am I buying this? How? Okay. So Ford gave you another chance. So many chances for you to make money. I mean, it was ridiculous. I understand this one. This was sketchy. I'm not going to give myself props for this one. at buying Ford for 7, and now it's at 24. I'm not going to give myself props for making a 300% return. I'm not. All right. But this was a no-brainer right here. And you guys just didn't see it. Like, that's a no-brainer. That's a no-brainer trade. Like, no thought. Because what you guys are doing, are you're trying to buy stuff because of how you feel, instead of looking and seeing what the people that move the market are doing. You got your focus on the wrong thing. When they start buying, you know they're buying because the 50-day is up, the 20-day is up, the 200-day is up. So when it hits the 50-day and it starts to go up and it goes green on the John Carter and it starts squeezing, guys, I mean, how many things do you need to happen in order to make money? I told y'all it's like a magic show. 20-day. If you want to make short-term money, you made it. 50-day. Short-term money, you make it. 50-day. All right. What are we sitting at now? Now, on this 50-day trade, I see 3 green here, but it's not 3 green going up. It's 1, 2, and then a 3 down. That's not the pattern. Because 3 reds going down means down. 3 greens going up means up. It has to be up. Maybe sideways, but at least up. This was a no-brainer in September. It gave you 2 chances after I bought it. Here, sketchy. Here, everybody should have bought it. Here, everybody should have bought it. 2 chances. Now we way up here in the stratosphere. Now y'all want to buy. Now y'all want to jump on the train. Way up here. Way up here in the stratosphere. Y'all want to jump on the train now. I get you jumping on the train, 10 to 15 days. Let's break it down day to day. Should you buy this, 10 to 15 days? We haven't really talked about the Ichimoku. Ichimoku, how does Joel trade the Ichimoku? Very simple. Very simple rules. Ichimoku. I got to leave soon, guys. Sorry, I spent a lot of time. I forgot I have to take my wife somewhere. All right, in like 25 minutes. So I'm about to get through all of y'all stocks after I look at this. All right. So the way that I trade the Ichimoku is very simple. When Joel uses the Ichimoku, he wrote it earlier, so a lot of you guys can go back and look at this later. When he uses the Ichimoku chart, if y'all even see this chart, you already know it's 30 days or less, period. 30 days or less. If you want to make fast money, I don't have to flip through 15-minute, 5-minute, 1 hour, 2 hour, day, month. I don't have to flip through all those charts. This stock is either going to run for 10 days or it's going to go down for 10 days. Run for 10 days, go down for 10 days. Run for 10 days, go down for 10 days. I don't need a day chart to tell me that. I don't need a minute chart to tell me that. It's going to run for 10 days or go down for 10 days. It's going to run for 10 days or run down for 10 days. What you guys got to start doing is seeing if that matters, like seeing if that works, by literally pulling up a chart and saying, well, Joel didn't notice somebody was going to pull up Ford. Let's see if it works that way, right? So if it breaks below here, are you telling me, Joel, when we go beneath here and it goes 3 red, maybe we stay underneath here for about 10 days? I say, yes, 7 to 10 days. So on this Monday, you should have expected maybe not until next Monday for Ford to have some selling pressure, probably for 7 days. Joel sees this on Monday. He takes it off his list. He on to the next stock till next Monday, and then he revisits and see if Ford's bullish again. This is for trades that are 7 to 30 days. So on this Monday, it was what, the 29th? It stayed underneath here. It didn't really pop above it until 12:10, 10 days later. Once it started to peak above this Ichimoku, and it was 12.9, I probably had enough money to make, it might go bullish till about the 19th, 7 to 10 days. Right? If it breaks below that faster than that, then that means there's still selling pressure that's there. So it stayed above it. It started to go up immediately on that Friday. And then it went sideways from Friday, 12:10, all the way till, what did I tell y'all guys? I said 12:19. Well, it's 12:17. No, 12:20, 10 days. Really didn't do nothing. Then once it got below there, Joel ain't messing with this for 7 days. Following Monday comes, Then I decide, hey, maybe I want to take a shot. This is what, the 27th. Oh, it got above here. I got probably 10 days that this bad boy can run. 12/27 comes, 12/28. I probably have until about January the 7th, maybe January 10th. It's going to be over with. Stocks don't usually run more than 7 to 10 days. They can go up. They'll go up for 7 to 10 days, go sideways, which we also call down for 7 to 10 days. Then it'll get some energy again, run 7 to 10 days. Then it's going to go down for 7 to 10 days. The reason why you've never heard this before is because y'all probably haven't talked to people that actually trade the market. All right. These are just normal waves. If you don't believe me, go look at any stock. Pull up the Ichimoku, any stock that we talk about today. You're going to notice, dang, Joe, these stocks really do go from 7 to 10 days, and then 7 to 10 days, then 7 to 10 days, then 7 to 10 days. I've been telling y'all this for years. So it started to run. Anybody getting in now, guys, you're gambling, because we on day like what? It got above here on what, the 27th? Right? You on day, what's today's day? All right, so you on day like what, 7, 8. We hit a high. We couldn't break that high. What do y'all think's about to happen? I can tell y'all what's about to happen. Probably about to go down. Not because nobody wants to buy Ford because it's an inferior product to Tesla. Probably going down because stocks run 7, 10 days, go down 7, 10 days. They go up 7, 10 days, go down 7, 10 days. Go up 7, 10 days, go down 7 to 10 days. And nobody's ever explained that to you because you're probably learning from somebody that ain't trading the market the hard way. I don't trade the market the hard way. Everything is easy to me. When I lose, I just accept my loss. I don't take it personal. I don't go and take a whole nother class because I'm trying to figure out why I'm losing. All right. You wanted to make money on Ford? Watch this. Watch this. We're going to look at a 1-minute chart. I'm going to get to y'all stocks, I promise. You want to make money in something like this? Watch this. If you get above the yellow line, you're going to make money. If you're going to go below the line, you're going to lose money. Or you're going to short the market. Just go back 7 days. What's today's date? Today's what? What's today's date? The 7th? Check this out. Was every day a trading day for Ford? Y'all saw how the chart went straight up, right? Y'all don't do this. We're going to go back to July. We're going to go back to 12/27 when this thing started to run. Oh, Jolie Joel, all Joel did was he woke up on this date and said, oh, I'm going long. Made money. Then on the next day, could you have made money on Ford? Joel would have woke up at 9:45. I would have been above this yellow line. I would have said, oh, I'm about to make money. Then I would have woke up the next day on this day, on Wednesday. Do y'all know Wednesday at 9:45, I would have said, oh, I'm underneath this yellow line. I'm not going to buy long today. It's probably going to go down. It didn't take no rocket scientist to figure it out. It's either you above it and you go up, or you below it and it goes down. You either above it and it goes up, or you below it and it goes down. You either above it and it goes up, or you below it and then it goes down. And then if you want to know how much it moves, you just simply say, Oracle, how much does Ford move? I don't know. Ford moves about $1. Told you how much money you can make. Y'all make trading, y'all swear it's this complicated series of education and stuff. And I'm like, I've been breaking this stuff down like this forever. All right. I know I make it seem easy because it is easy. Y'all need to stop thinking that this stuff is complicated because it's not. You either buy it when people are buying or you don't when people are not buying it. You're not going to change the market's movements. You can't study the night before and know what Ford's going to do today. Because if I was a betting man, I would have thought Ford was going up on this day. I literally woke up and said, oh, it's raining today. Nobody's buying it, so I'm not going to buy it. And then when Ford went down, it wasn't a secret. Then when you woke up the next day, you're going to ask yourself, what would Joel do? Joel says at 9:15, he don't know what the heck he buying. I could put Ford out there to buy. I might buy Ford. But Joel ain't buying Ford if the billionaires ain't buying Ford. I'm not. I'm going to go party with the billionaires, not with the thousandaires. Thousandaires don't know what the hell they talking about. So then I wait till the next day. Next day, we're above the yellow line. Oh, it lost on Wednesday. It won. It was below it. It didn't make money. This day, it made money. Joel, it can't be that easy. I'm losing all this money. I done spent all this money. Why am I losing money? Probably thinking too much. Thinking that you need this super duper secret stuff that I guess maybe this is secret. I've been giving y'all this for free forever. When I first created the Insider Trading Room, which was called Ninja Trading, I don't think a lot of y'all know that. The name of the room wasn't Insider Trading. It was called Ninja Trading. That's why I have a room now called Ninja Trading. That's the foundation. Not that room, but that was the foundation of a lot of what we're learning today. And I just gave it to people for free because I just thought that's what you do. Hey, guys, let's learn this together. And then when we all become successful and we become millionaires, then we're going to go out there and then maybe teach and have classes. Y'all know what ended up happening? Everybody around me decided I'm not making any money now, so I'm going to do other things to make money. So everybody left. And it was just me trading and investing by myself. Joe, you should have classes. I'm like, why? I don't have anything to show. Why should I show y'all something and I ain't made no money yet? Cause, dude, this is the way to go. This is how you do it. We smart. Let's just do classes. I'm like, no, I'm not gonna create nothing until I win a championship. Like, that's how I was brought up. I don't get clout unless I do things. I'm not gonna just do something because I'm gonna do it. That's ego. All right. No, I'm not going to because I don't want to teach you something and then you end up being where I'm at. All right. Not going to do it. Let me learn this. Then let me reach these levels, these goals. Then if I decide I want to teach, then I'll do it. And that's what happened. I waited almost a decade, right? Until I could call myself a millionaire. And then I wrote down the strategies that I was using. I was using the strategies that I was using. That's why it's so easy for me to analyze this stuff. It's easy to me. Easy crap, right? So I see the market for what it is. I've been in it for so long, I understand it like it's my mate. I try to make it, I spend a lot of time looking at some stocks like this because I guess that's what you guys are asking me to do. When I run through stocks, y'all don't you don't understand the patterns. So I'm trying to change a little bit so that, you guys can start finally seeing it for what it is, right? You made money here, then at 2 o'clock, 11 o'clock, the market said, oh, we're not going to buy Ford anymore. We're going to sell it off. You woke up on this day, it was above the yellow line. You said, oh, I can make money on Ford. If you're intraday trading, okay? It's very easy when you know what to look for, all right? All right, let me breeze through your stocks now. We got Microsoft. I'm just going to assume I'm going to pull up this chart because we can look at the most things on this chart. But I mean, guys, it's like a broken record, right? Y'all see what happened at the 200 day. It's like a broken record. Tired of doing it, right? Look, one line, bam, green, bam, next. All right. 20 day. All right, let me show y'all a couple of times. You intraday traders, not intraday, you swing traders want to make money in 20 days using the 20. There you go. There you go. Those are your entries. Bam. Here's your entry. 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 Bam. How many times has bad boy won in a row? 1, 2, 3, 4, 5 if you give yourself 20 days. 6. Then it started to lose. Oh my God, I lost. I need to go take a class. Ooh. Oh my God, Joel, your strategy is terrible. I told you to buy You told me to buy Microsoft. I'm losing. 1, 2, 3, bam. It starts to win again. Line. Win. Win. All we do is win. Look at this. I mean, come on, guys. Why y'all make this hard? This is the easiest freaking thing ever. I'm gonna tell you why it's hard for y'all. Hold up, Joel. I gotta go. Hold up. I gotta look at this chart. Hold up. Let me analyze this chart. All right. And then I see that it's doing this. Okay, so it's going down. So then I'm gonna flip back here. And now, hold up, it was going down on the hour chart, but on the 50-day it's hitting it. So I'm gonna draw a line here. Like, can you go back and show me what you just did? Because I saw it going down on that chart. All right, so now I'm gonna pull out my minute chart and let me see what's happening here. I done looked at my 3 charts and hold up, it's going up. But hold up, Joel, on one chart it was going down and on this chart it's going. That's why y'all can't make money. You see what I just did? It looked confusing, right? This is y'all's strategy. This is what y'all do. Because you were taught probably from 7 different teachers and you're trying to use everything everybody's ever taught you to buy something that's going to go up or down. Old Jolie Joel said, how many days I want to be in this? What, when, where, why, how? What, when, where, why, how? How many days? 20 days? All right, an hour chart. 70 days, day chart. 7 minutes, 1 minute chart. 770 days, a day chart. 1,000 days, day chart. 17 days, an hour chart. 7 days, an hour chart. 72 days, a day chart. 71 days, a day chart. 33 days, ooh, that's an hour chart or a day chart. 3 days, that's an hour chart. Overnight, that's an hour chart. 20 minutes, that's a 1 minute chart. 3 hours, that's a minute chart. 4 hours, that's a minute chart. 24 hours, that's an hour chart. 17 days, that's an hour chart. 45 days, that's a day chart. Maybe you can use a 50-day moving average. You see how I can run this off? Y'all can't do that. Y'all can't do that. And I literally was just going off of a time frame I just gave y'all in the beginning. If you can't do what I just did, this ain't for you. Sorry, you need to invest. You need to use the 200-day. When it hits the 200-day, it goes green. Give yourself 200 days and be done with it. I don't have to go take an options class that's 7 months long to figure out how to do that. All right, I don't. Y'all just like y'all are like masochists when it comes to teaching. All right. The teaching comes from your experience. Go out there and buy some. All right. All right. That's Microsoft. You could have made $1 million in it. Ethereum. All right. Let's look at Ethereum on. Let's look at Ether here. All right. Did y'all know that Ethereum was $377 billion? A bunch of y'all didn't know that. All right. It's going up in value. It's at 3,100. It came from 4,600. All right. You can pull a 200-day moving average on Ethereum. All right. But, you know, it's the second largest crypto in the world. All right. If I wanted to buy Bitcoin, remember how I told y'all this works on everything? Hold up, Joe. You better not tell me that this works on Bitcoin too. It does. 50 day, give yourself 50 days. Went green, went up. Hit the 20-day, went up. Hit the 20-day, went up. Hit the 20-day, went up. Hold up, you looking at Bitcoin? That's exactly right. I'm looking at Bitcoin, and it's operating just like everything else because I just told you guys the secrets to making money. Hit the 200-day. When it hit the 200-day here, it was at 30,000. We at 40,000 now. I got people in the room right now. That's like I know I told y'all to get out at 50 and we at 41 now. But anyway, I'm not even gonna go there. Guys, this was a fake out right here. This was a fake out. I don't normally see it on a chart. That's a fake out right there. It broke the trend and then it went green here. Now, this might be when it comes back around, but every now and then you're going to see a fake out. But What do I also notice? The 50-day is angled down, the 20-day is angled down. So there might be some issues. If you're not in Bitcoin yet, stay away until we break this trend and we start to go green again. I think if we do it again, the first place we're going to do is hit this 50. And then if we can get above that 50, we might be but not until then. Let's look at TD. Let's look at Trade Desk. I think that's Trade Desk. Interesting. I know every single stock y'all gave me today. You know why I know every stock y'all gave me today? Because I buy stock. All right. Look, hit the 200-day, went green here. You could have bought it. You could have made money. It's the same story, guys. It hit the 20-day, is going up. It hit the 20-day again, is going up. Like, come on, man. I mean, this money is easy. Hit the 50-day and the 20-day, went green. It went up. It went up, it went up, it went up, it went up, and now it's finally going down. Why? Because the 50-day is moving down. But look, it still didn't break the 200-day. Hit the 200-day, went up. Hit the 200-day, went up. Finally broke through here. But why did people continue to buy this? Because the 200-day was still angled up. So when it's below it and it still hits the 200-day and it goes green, it's still a buy. And then it hit it again and it was a buy. Easy money. But now it's going down. People bought it there, it went up. And now we're sitting at the 200-day. Do you buy it right there? You can. It's a gamble. But Joel's going to wait for it to break here, maybe go green. Okay? So we're at the point where you're analyzing it. Why? Because I don't think it ever just hit the 200-day, guys, and just completely bounce. It's going to give you some it's gonna make you work for it. And then it popped up in price. You could have bought it late right here and still made money, because it doesn't matter where it came from. It matters where it's going. All right, we did Microsoft 90 days. Someone asked, can I please get that day trading room? You have to have, oh yeah, you bought my product, Garnell. So all you got to do is show a receipt and Messenger. My niece is going to let you in. Someone asked, Meta ETF, is it worth investing? I don't know what the Meta ETF is. Does anyone know what the Meta ETF is? If you guys can give it to us quickly, I can look that up. All right. Someone wants to look at Affirm, which is one of the Affirm is one of the fintech companies. So if you're into fintech, finance tech companies like SoFi, PayPal, this is a kind of company you want to buy. Guys, this is not the time to buy it. What color do you guys see? Red. Do you see any green? No. So then you shouldn't be buying it. There's no green. None. Zero. No green. Why are y'all buying this? So if you're going to buy it, wait for it to break this trend. Now, that doesn't mean that it can't be going up. Remember, I'm looking at it as a day trade. What if I was looking at it as a swing trade? Still no. We're underneath this yellow line. Are we above this yellow line yet? No. If we get above it, we can get a 7 to 10 day run. Let's say you wanted to trade that as a day trade. You see how things can change just by what chart you're looking at? If you were day trading this, it was a great trade to make money to the upside. Y'all see how on the hour it was down, the day it was down, but on the minute chart, you could have made money because it's 3 separate charts with 3 different strategies and you guys are combining them all. That's why it's hard for you to make money. Let's look at Roblox. Roblox 200-day. Red. Why are y'all buying this? It's red. I don't see no green. None. Nah. All red. Green. It's just red. Wait for it. Wait for it. Wait for it to go green. Guys, wait for it. Even if you were trading it on an hour chart, it's not time yet. 7 to 10 days. So if you're thinking about reversing it, this bad boy been going down since December the 2nd. It's not time to buy yet, but it finally hit the 200-day. Okay. All right. Someone said, Freddie said, and Lord, I need Joel to stop attacking me in class taking non-buy and self. You need to stop. Yeah, quit taking all these classes. Go buy some. Carvana, sometimes I'll buy stuff with you. You're like, guys, if you want me to buy a share with you, be like, Joel, I feel scary about this. Can you buy a share with me? I'll go in my account and buy it, as long as it's not Berkshire A. All right, let's look at Carvana. I don't know the ticker symbol for Carvana. Oh, CVNA. CVNA. I literally got to go and nope, not time to buy. Hour chart down, day chart down, not time to buy. Now, doesn't mean it can't pop up tomorrow. It's just not the time to buy, guys. Look at all this red. This is not trading the way I trade. Look at that, it's red. 200 days angled down, stay away. Stay away until it starts to go back up. Square. Let's look at square. Look at square. Square. Square, guys, red. It's red. Why are y'all buying stuff that's red? Quit trying to time the market. You can't time it because you ain't the one that turns the market. It ain't you. Sorry. You know, I'm sorry to hurt your feelings, but you can't turn the market. Wait until it breaks this line and goes green. But look, the 200 day is angled down. That's not good for Square. Twilio. Twilio is like your Salesforces, right? So if you're into cloud computing, then this is the type of company you want to buy. Now, I've been buying, the Salesforce. If you want a little bit more beta, you might want to buy this one. Still 200 day angled down, 50 angled down, guys. None of these stocks look good as buys, like none of them. They just don't. Even if I wanted to make money in the next 7 to 10 days, there's 7 to 10 day moves to the downside. Maybe I was able to take it for a day trade. Nope. Look at this. 9:30 this morning. It was up by 10 o'clock. It was terrible. 10 o'clock, it was down. So, Twilio's a no-go. SoFi is your fintech companies, right? So if you're into fintech, companies like PayPal, Visas, look at this, guys. We just been ranging. Remember, I don't like really buying stocks that go sideways. Now, if it breaks 13, it can get to 26, and then it can get to 50. So we are at the bottom of the range. So if you're buying this as an investment, just know the 200 day is angled down a little bit. You got to give yourself about 200 days. Guys, these stocks don't look like they want to turn around until like June. All right, so be careful. Carvana 1 day. So if you wanted to make a 1 day trade on Carvana, not from what I see. 1 day chart, 1 hour chart, it's not doing what I like to see it do. Okay, it's underneath the Ichimoku. Could this be the day it turned? Yeah, but I'm not going to get in it on that day. I don't want to be the one that turns the market because trying to time it is not going to happen. Now, if at 4 o'clock you see this run and then it starts to get above this yellow line, then you might want to take a shot on it to try to hold until, Monday morning. All right, I don't even know. Ooh, one of you guys got me. JKS, never heard of it. You got me. Jinko Solar Company. 200 day angle down. As an investment, I want to see it. It started to go green. You could buy this now as an investment. Okay. Does look a little solid. You can buy that as an investment. Give yourself about 200 days. But anybody trying to day trade this or swing trade it, it is giving you, I think it went above here on December the 30th. It's been 7 days. Remember, stocks run 7 to 10 days. I don't like getting in on the 7th day that it's above this line, right? I want it to break below it, break back above it, reset. Then I can have my 7 to 10 day run to the upside. Shopify, one of my favorites. And I got to go soon. Shopify. Ooh, that looks ugly. So please don't buy that as a swing trade. And ooh, it looks ugly. But it's still a great investment. Just don't buy it as an investment yet. Wait until this selling pressure stops. It's a lot of selling pressure. And it can get down to about the 1040, maybe even $1,000 range. That's why you guys see a whole bunch of alerts down there. Y'all see all my alerts down here? That's where Shopify looks like it wants to go to $1,000. I would be careful. Someone said they want to learn how to do this. Watch all of my videos. sign up for webinar week. Get all your friends to sign up for webinar week. XLK 3 months. Let's do the math. What would Joel do? 3 months, 90 days. Should I be looking at an hour chart or a minute chart? No, I should be looking at a day chart, 90 days. Can I use the 50-day moving average? Yeah, but when you get to that 90-day area, you want to use the 200-day. So the XLK is the technology ETF. We are hitting the 50-day moving average. Now, you can go 90 days out, but I'm not buying it just because it hit it. People, this thing can easily drop down to this 200-day. This is not the time to get it. Now, if I was to go to the options market, and if I was to go all the way out to March, and if I was to go all the way out to March and I saw unusual options activity in March and I don't see it, y'all see how there's more volume on the put side than the call side? Y'all see this? 1,000 contracts over here, 300 here. I wouldn't make that play yet. Okay? Be careful. How you pumping somebody else stuff, Sheena? Anyway, my webinar is coming up as well. I don't know anything about Paul Rivers, but Sheena's taking some of my stuff. Maybe Paul is decent. Facebook 30 days. Facebook 30 days. 30 days, I'm going to use maybe a 20-day moving average. 30 days, I'm going to probably use the hour. I'm going to wait until we get above this Ichimoku, which we're not yet. So I'm going to wait until we pop above it. But I'm going to go and look at my 20-day, see where we are in relation to the 20-day and the 50-day. And Facebook actually looks a lot more bullish than anything that we looked at today. Y'all see that? Facebook's 200-day is up, 50-day is up, 20-day is up. This is probably one of the most bullish charts I've seen. But I'm going to wait until it breaks this trend to make some money, all right? It's an upside down head and shoulders pattern, so you should be okay. Let's look at Disney. And I was just playing with you, Sheena. Y'all know I'm going to give y'all some sass. All right, Disney. I've been buying Disney as a long-term investment. It is down pretty big. It's down, I think, 15 or 20% from the highs. So Disney, I've just been buying it for my sons, but it was down about 30%. It's now down about 22%. So stocks like this, you buy it when that happens. The 200-day is angled down. So when you see an angled 200-day down like that, you really want to give it 200, 300 days. All right. So this might struggle for a while. Just know that when you're buying Disney. All right. Be careful. And Garnell, you put 1 minute, but I don't know which chart you wanted me to look at for 1 minute. Somebody asked for the ATR. The ATR is the average true range. Someone wants to look at the heat map for today. The heat map right here looks mixed. Don't really look like the market's really doing any. I mean, it's going back and forth. Looks like your big tech stocks are being sold and bought. So I haven't really checked out the market to see what we're doing. Someone said that there's no audio. I'm pretty sure you guys can hear me. So I've kept you guys on here for a minute. Someone asked for a Carvana 1 day short. Oh, yeah, Carvana, CVNA. CVNA. If I'm going to hold it overnight, I'm going to use a 1 hour chart. And if I'm going to look at a 1 hour chart and we're underneath it, oh, yeah, I'm definitely going to short this bad boy. But I probably would have shorted it right around Wednesday. We went underneath the Ichimoku on Tuesday, and it's already Tuesday the 4th. So we're 3 days into maybe a 7 to 10 day move. So yeah, if you wanted to short this until Monday, or you want to give yourself a lot more time, that looks like a decent little trade. All right, guys, I got to get out of here. I apologize. I know that there's a lot of. Let me see if I can get to some of your questions. Jerome says, "Yeah, we overthink about what to invest in. Y'all overthink stuff all the time. Maybe you guys can check out the. Yeah, I already did Ford. Pamela said, Joe, you make so much sense and make it sound so easy to do because it is easy to do. Yep, a lot of you guys confuse yourself and you just make it just too complicated. You guys just do. All right, I want you guys to start analyzing it. Start asking yourself, like, what would you do in this situation? Don't even put my name in it anymore. What would you do in this situation? Right? Ever since you put me onto the ATR, I've been able to find the bottom, been off 10 cents put forward and called PayPal down to the 186. Yeah, guys, the ATR is not what I created. The ATR was created for you day traders. All right, so I got to get out of here. But before I go, just make sure that you guys sign up for webinar week. All right, if you're not part of the Inside of Trading Room, please go and join the Inside of Trading Room. The event that I have coming up next week is how to buy stock options and day trading party. You can go there. It's going to tell you everything about, what I'm offering. It's a 3-day webinar. I'm going to teach you stocks the first day, options the second day trading the third day, so that you guys can look at the market similarly to the way that I'm looking at it. There are 20-something people signed up now. There was over 150 last year. Most of the time we get a lot of people that come into the market towards the end. Let me show you guys, if you want your charts to look like mine and you have the TD Ameritrade platform. Oh, let me take this off so you guys can see. All right. If you want your charts to look like mine, you can always download the Thinkorswim platform. I did upgrade the Thinkorswim charts. I also upgraded the stock party, the options party, and the day trading party. Just remember, guys, investing and trading is easy. You guys make it hard. I want you guys to keep it super simple. I'm coming to you guys from Decatur, where it's greater. And I'm out of here. If you haven't downloaded my app, please go out there and grab the app. It's free. And then, go to my room on, go to my Ninja Trading Room. If you bought a product from me, you guys can also find free videos on YouTube at What Would Joe Do. If you need to book a consultation, you can always go to the What Would Joel Do page, book a consultation with me. I'm here to help you. And I'm out of here. Peace. Later.